helping families build legacy through real estate. I am Edwin Silie, your South Florida realtor, and today I want to clear up one of the most common and costly misunderstandings in real estate, and that is the difference between pre-qualifications versus pre-approval. If you're a new home buyer, in this video, I want to save you time, stress, and money as I talk about 10 different things that you have to know about the differences between pre-qualifications and pre-approvals. So stick around and let's get into it. Too many people jump into house hunting before they're financially prepared, and it almost always backfires. So let's get into it. One, what is pre-qualification? Think of pre-qualification as a friendly conversation that you have with your lender. You tell them about your income, your debt, maybe they do a soft credit check, based on what you say, and they give you an estimate about what you might be able to afford. Here's the catch. Nothing is verified. It's basically like someone saying, sure, sounds like you could afford around $400,000, but this is just a guess. This is a ballpark figure guess. Imagine this. A buyer could think that they're good to shop for a $450,000 level house, because a pre-qualification says so, only to find out later that their verified numbers only supports them getting $375,000 loan. That's a huge difference and can throw off the whole search. So what is pre-approval? Now, a pre-approval, that's really is the real deal. That's really is what you want. With a pre-approval, the lender asks you for actual documents, pay stubs and W-2s, tax returns and back statements, and they run a hard credit check. They verify everything. At the end of that process, you get a letter that says, this buyer is approved for up to $500,000. That's not a guess, that's actual proof. So many buyers, they wait until they find a home they love before getting their pre-approved. But by then, another pre-approved buyer could have easily jumped in and made an offer on the house that they fell in love with. So secure your deal before somebody else does. Number three, why pre-approvals matters here in South Florida, even more than anywhere else. In South Florida, the market is competitive. Homes can get multiple offers within days or even hours. Without a pre-approval, you're not even in the race. Imagine two buyers, they see the same home and that same home is listed for $475,000. One has a pre-approval letter in hand, the other one just a pre-qualification. Sellers almost always choose the pre-approved buyer because it means less risk and faster closing. Number four, there's an emotional side to all of this. And let's be real, buying a home is an emotional event. You walk into a house with a perfect backyard and you see your kids playing in it, and the open kitchen is what you dreamed about, and is a rice school district, and you picture your family living there. And now imagine being told, sorry, you can't afford it. The bank won't lend you what you need to buy this house. See, that kind of heartbreak is preventable. A pre-approval protects you from falling in love with something that's out of reach. Hey, if you're finding this information helpful, let me introduce myself once again. I'm Edwin Silie, a South Florida realtor, and I am working with Keller Williams. I don't just help buyers buy their home, or sellers sell their home. I walk with you just step by step so you can build a legacy through real estate. So whether you're a first-time home buyer or seller and you're ready to upgrade, I hope you find the right home and the right financing. So call me at 786-774-9077 or visit my website. Let's get you started the right way. Number 5, pre-approval protects your budget. So here's the truth. Many people tend to overlook this. Just because you're pre-approved for $500,000 doesn't mean that you should spend $500,000. See, a buyer is pre-approved at $500,000. He or she may realize that the monthly payment that is around $3,600 plus taxes and insurance, that can feel overwhelming. They might choose to be wiser and choose something closer to $400,000, which brings their monthly cost way down or to something more comfortable. Pre-approval gives them clarity on their tap number, but it also helps them stay realistic. Don't just go for the max, just make sure you stay at your comfort level. Number 6, pre-approval helps your realtor help you, and that's important. When your realtor knows what you're pre-approved for, what your price range is, you don't have to waste time looking at homes that you can't afford. Instead, you can zero in on homes that match your lifestyle and your financial comfort. If you're pre-approved for $450,000, that might mean that you have to focus on a new construction in somewhere like Homestead that they're found, or maybe you could renovate a property in Color Bay, or rather, that falling in love with something like $600,000 in Coral Gables or something like that. A pre-approval helps you stay focused and help you stay in line with what your goals are and help you expand or widen your territory so you get what you need with what you can afford. So you don't become house poor. So you can actually enjoy the house that you buy. 7, pre-approvals actually strengthens negotiations. Sellers love certainty. So if they see 2 offers, one with a pre-qualification letter and one with a pre-approval letter, they almost always take the pre-approved buyer. Picture that you're selling a car, and one buyer comes to you and says, I should be able to get a loan for this. But another buyer shows up with proof from the bank that their funds are ready. Which one will you trust? Which one will you sell the car to? That's exactly how home sellers think. It's a bigger purchase, a bigger sell, but they want somebody that is solid, that is there, that is ready to go. Is that going to be you? Pre-approval allows you to say that and to be that buyer. Number 8, timing. How long does it actually last? See, a pre-approval isn't forever. Most are good between 60 to 90 days. That gives you a solid 2 to 3 months to shop with confidence. If you don't find the right home in that time, you can just update your documents with your lender and get another time and get more time. That's why you don't have to rush to get the home that you really, really want. Number 9, what do you need for a pre-approval? This question varies depending on your lender, but most lenders will require for you to give at least 2 years of your tax returns. Everybody that's going to be in the loan, recent pay stubs, bank statements, employee verification. They ask you for your IDs, your social security number, your social security card. So it's not really a complicated process, but it just takes a little organization. Number 10, this is the bottom line. Pre-qualification is just a guess. Pre-approval is proof. And that's what you want as a buyer, because that's what sellers are looking for. So if you're serious about buying a home, don't waste your time house hunting first. It's a headache, it's a heartache. So get pre-approved first. It sets you for success. It gives you a peace of mind. And make sure when you find the right house, you're ready to move. And that's what you want to be. That's the place that you want to be. That's what I would like for you. So don't make these mistakes as a buyer. So make sure you avoid these mistakes. So even after you get pre-approved, these mistakes can truly throw you off and derail you before closing. So here's a few that you have to avoid. Number 1, don't open new credit cards or finance big purchases. Buying furniture, a new car, or even applying for store credit can change your debt to income ratio and lower your score. 2, Don't quit or change jobs suddenly. Lenders like stability. Switching jobs during the process can raise red flags. 3, don't make large unexplained deposits. If you put a big chunk of cash in your account, the lender will need a paper trail. If you can't prove where it came from, it could stall your loan. 4, don't stop paying your bills on time. Even one late payment can knock your credit score down. Stay on top of it. 5, just don't assume you're done after your pre-approval. Keep your finances habit steady until after you close your home. A buyer could be pre-approved for $400,000, but then he goes out and finances a $40,000 SUV. By the time the lender reviews their updated numbers, the approval amount drops or the deal falls through entirely because of that purchase. These mistakes are avoidable, and knowing them, it can help you protect your future home purchase. So make sure you don't make them. And as we end this video, just remember that for me, every transaction is a mission, and my mission is to help you build your legacy through real estate. If this video gives you any clarity, please hit the like button, subscribe to the channel, and share it with someone who is starting their home search, and know that yes, we ask because it does help us out tremendously when you subscribe to our channel, and when you share it, and when you hit the like button. I will highly, highly appreciate it, and I thank you in advance. If this video helped you in any way, check out this other video that I talk about equity, lines of credits, and what does that mean for you if you already own your home. What can you do with your equity? How should you use it? It's actually a very good video. Check it out. And remember, as always, God loves you, and so do I. See you over there.